Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? Hope you're having a good day, right? It's okay. It's all good. Hey, taxes are done, right? 2020, it's over, July 15th. You filed your taxes? I waited until the last day, I'll be honest. I had them ready, I just waited. Why? I have to pay the money. I was going to wait till the last minute. Anyways, hey, let's start talking about 2020. You know, there was a poll. They polled TD Ameritrade, and they found that over 10% of their customers did a Roth conversion when the markets were down. We took a look, and we actually did 31% of our customers converted some money to a Roth IRA, if not everything they had to a Roth, which all of our information is public. You can look us up on the SEC website and really get an idea of how much work 31% of our customers was. But no, it made sense, right? There are a couple times you want to consider Roth conversions. This year, there's at least two. There's probably more, but it's a short video. We'll give you a little bit. When the markets fell, I actually yelled at customers to consider Roth conversions, and I went through all of it here. If you're one of our customers, you go into the dojo. If you scroll down, it's about here. There it is. When the markets were falling apart, we went through all the updates, let you know what we were doing to improve and make sure everything was fine. Then I just did a class that said, I don't care that the markets are falling. Let's talk about how to take advantage of the market falling and not give you this foo-foo sort of nonsense stuff that other advisors do. Don't worry, it's going to be fine. I actually gave him 4 really great reasons, and I remember vividly yelling in that class, so I'm sorry. But I was so passionate about it, right? It was an opportunity. So let's talk about it today. I'll give you 2 reasons why you might want to consider it, and no hurry. Just have to have it done by the end of the year. Of course, this is a marketing video. If you choose to work with us, that's amazing, but if you don't, at least consider it. Talk to the person you're working with to maybe get this done. Also, it's an election year. Probably going to be more volatility. Historically, volatility spikes as we get into election year. You will see a lot of action in the market. Hopefully, we can get the markets to fall for you, because this is why. If you take a look at the stock market, let me pretend you have $25,000 in the stock market. All was good. January was great. February was great. And then something around February 19th called the coronavirus became a serious issue, and likely the value of your account fell maybe more than 30%. Stock market fell 30%. Maybe you fell that much. In this example, since I can't do the math that fast, don't want to, let's pretend that you fell 20% at that time. That's no fun, right? I've done the stats on this. Everybody knows, and we've covered this in our classes for customers, how often do the markets fall 20%? Well, because we know that already, we can now look at this as an opportunity to consider what to do rather than panic like everybody else did, right? So let's say the value of your account is now $20,000. Was 25, now it's 20. Holy cow, what do we do? Consider a conversion. See, the IRS sees the conversion amount, the value when you do the conversion. They don't see what it was over here, right? So if you had investments X, Y, and Z in your account at that time, it fell 20%, and you say, IRS, I'd like to convert this money. Now, for those of you that don't know what a conversion is, it's just simply taking money from an IRA and moving it to a Roth IRA and paying the tax for doing that, right? So we don't want to convert at high amount. We don't want to convert when stock markets are at highs. We want to convert when stock markets are at lows. It's legal. They let you do it, so let's do it. Let's pretend that's what happened. Value of your account drops to $20,000. Old Dustin's over here yelling at you saying, I get it, it's falling. Here's what we're doing to make sure that you don't lose all your money. But also, while we're down here, let's go ahead and convert this thing to a Roth. Now we've converted $20,000 instead of $25,000, and we still have investments X, Y, and Z. The value of these, what happened? The stock market recovered, right? The stock market recovered pretty much everything. It's working on it, right? So nonetheless, the IRS sees $20,000. You recovered back to $25,000. Oh, but it's too late. I'm already in the Roth. Can't tax me, right? So those little moves like that don't sound like a lot, but they really add up over time. You got to take advantage of those opportunities when they do happen. So that's the first thing. The money is the same. The investments are the same. We're just trying to show the IRS the lowest possible number, and that's legal. It is very much legal. You can do that. Okay, the other reason you may want to consider a conversion is, like I said earlier, about 22 to 25 million of you have some form of reduced income. Either you still have no income, you had to take a month off, you were asked to work from home for half as much. I mean, I heard every story. Trust me, I heard them all. But if your income is going to be lower, then maybe this is a year to make up that difference by doing a conversion. Let's go over and talk about that. So let's say that let's say you're used to making $70,000 a year. And please don't bash me on this one. I'm just going to do a really simple example. Let's say you make $70,000 a year, you file your tax return, you get a $500 refund. That's as close as you can get it. We've done videos on that to try to get your refund number as small as possible. Let's say that's the best you can do. That's what you're used to getting. This year, the virus kicks in and you're going to make $50,000, or at least you're on track to make $50,000. That's the best you're going to get this year. Your income is lower, meaning you're going to pay less tax. So what happens if in that previous example, we just convert $20,000 of your money to a Roth? Let's say you had an IRA, 401k, and they let you do it at work or something like that. Let's say we convert it to a Roth. Is that not $70,000? Is that not basically the same income you were expecting? The difference is this doesn't go in your pocket, right? That's going over to a Roth IRA, right? So it's not that you're paying yourself that, but you are going to pay tax on that. Aren't you going to be around the same area? All things remaining equal, of course, right? Not anything changing. All things equal, aren't you going to be about the same thing? Right? So we didn't bump you in a new tax bracket. We didn't change anything else about your tax situation. The only thing we did is say, I was making 70, I made 50 this year. Let me make up the difference with a Roth conversion. That money will never be taxed again, and that's it. Here's the catch. You pay the tax when you do your tax return, right? So when you do a conversion, just as simple as I can say it, when you do a Roth conversion, the IRS doesn't know, right? You're just reporting a transaction. They don't come to you and ask for the money on the $20,000. They do that at tax time, right? So at tax time, you're going to have to pay something. So if you're not good at saving money, you don't have any savings, you don't expect to have any savings, you know, that's consideration, right? Because you don't want to take money from that. In fact, I won't allow it. I just wouldn't allow somebody to pay for a Roth conversion from their IRA. It doesn't make any sense at all, even with the new CARES Act rule and everything. So don't do that. Know that you do have to pay the tax there, but the idea is that you converted a smaller amount, it grows over time, you never pay tax on it again. If you're young, something to consider, right? Something to consider. Hey, I hope you enjoyed that there. Just a couple examples, again, in the dojo for our customers. We do a weekly class for them. All of them are archived in there, as you saw, and they're kind of fun, right? Because we do them we call it the speakeasy over there. It's a bar, and so sometimes we get a little loose. We're just teaching stuff, come up with all kinds of great ideas. Anyways, that's enough for me. I hope you enjoy the rest of your day. Thank you so much for watching, and hey, hit the subscribe button. I really appreciate that. A little something you could do for me, and we will talk to you soon. Enjoy.